During the quarter, the Merchant West SCI Stable P&G Fund returned -2%, underperforming its benchmark, which is consumer inflation plus 4%, as well as the peer group average. The underperformance can largely be attributed to the fund's very low exposure to the resources sector in South Africa, as well as the fund's relatively low exposure to developed markets and specifically to technology companies within those markets. South Africa's banks and insurers were some of the biggest losers during the first quarter and were a major detractor from the fund's performance. During the quarter, there was a major shift in expectations regarding when global interest rates would start falling. Higher inflation, a strong US labor market, and hawkish commentary from central bank officials means the first Fed rate cut in 2024 is now only likely in the third quarter if they cut it all this year. The US economy continues to expand at a healthy rate, growing by 3.4% annualized in the fourth quarter of 2023 versus market expectations of 3.2%. The healthy state of the US economy, together with ongoing enthusiasm around the benefits of artificial intelligence, led to another excellent quarter for US equity markets. The S&P 500 is up more than 9% year to date, following its strongest first quarter performance since 2019. The US 10-year Treasury yield moved back above the 4% level to 4.19% from 3.88% at the end of December 2023. Higher bond yields also had a negative impact on global listed property, with the GPR 250 REIT index declining by 2.2% in US dollars over the quarter. Inflation in South Africa remains at the top end of the SARB's targeted range, and so the SARB's Monetary Policy Committee voted unanimously to keep the local repo rate at 8.25% following the conclusion of their March policy meeting. South Africa's economy grew by a marginal 0.1% in the fourth quarter of 2023, bringing the annual growth rate for 2023 to just 0.6%, and this lack of economic momentum has continued in 2024. The weak economic growth in SA contributed to a weak quarter for the SA equity market, which finished down 2% despite an impressive rally in the precious metal sector. South African bond yields also rose sharply over the quarter amid uncertainty regarding the outcome of the upcoming election and a weaker rand. SA-listed property appeared to take its cue from global equity markets, ending the quarter as the best-performing asset class, with the SA-listed property index advancing by 3.8%. From a portfolio perspective, the fund's position in the Merchant West SCI Global Managed Growth Fund has grown to just over 13% of the fund, following a strong quarter during which that fund gained more than 5.5%, supported by a much weaker rand. The fund paid a distribution of 20.52 cents for the A class and 21.76 cents for the A1 class, in line with our expectations. The first quarter is always the quarter with the lowest distribution in the year, as no South African REITs declare or pay dividends in that quarter. Life Healthcare declared a special dividend during the quarter, but payment will only be received in the second quarter. Distributions are currently forecast to grow by more than SA consumer inflation in 2024, mainly because of higher foreign income from a weaker rand, as well as the payment of the Life Healthcare special dividend. The fund's current allocation to growth assets has been reduced to 60%, but is not far off the maximum permissible allocation of 65%, being 40% in equities and 25% in listed property. Based on a combination of Bloomberg, Refinitiv, Iris, and Merchant West Investments forecasts, the current one-year forward income yield on the fund is 8.1%, which compares very favorably with the yield on money market and income funds, despite having a 60% allocation to growth assets. Based on these same forecasts, the income produced by the portfolio is expected to grow at approximately 3.6% per annum over the next 3 years, reflecting the expectation of a slowdown in economic activity both globally and in South Africa.